Forex Focus brought to you by IG. Today, going deep on the recent Japanese yen collapse. You might have thought that the yen was out of the woods the later part of 2022 and into 2023, but right back at its lowest levels in the last 30 years, as dollar yen is now at its highest levels since the early 90s, and people wondering how bad it can get. And we're going to tell you in a second. We're going to look at a bunch of data, but let's start with just the price action in this dollar yen market, hitting 150 once again. And this is a market that's closed above that 150 level one day, exactly, just one day in the last 30 years of trading. And you can see for the last couple of weeks, it's been hovering right at that 150 line. And a lot of people wondering if it will exceed it. Will it close above it? Will it get to 151, 152 prices that it hasn't seen in the last 30 years plus? Only time will tell, but we've got more historical context. And I want to take a look at some futures options prices to see where traders are thinking this market could go in the next few months. It closed at 150.36 in October of 2022 for one day. And you might remember it traded above that the following day, but there was some Bank of Japan intervention. And when central banks intervene, it doesn't mean that a currency has to go the way that they are intervening. They'll go out there and they'll perform actions that influence that market, but then they leave the market, their intervention's over, and the market can do whatever it wants. But that being said, this was, relatively speaking, a successful intervention. The yen was able to capture back some strength, normalize a little bit. And by the end of the year, dollar yen got back to below 135, close to 130, and actually traded under 130 in the early part of 2023 before now getting back to this 150 level once again. And last year, it was the peak of those inflation fears. This time around, it's not necessarily that inflation is peaking. It's that the duration of high inflation in the U.S. is kind of peaking. People thinking that inflation might be stickier than they did think, a few months ago. And here is the monthly chart now for the last 30 years. And you can see, in the late 90s, took a shot at 140 and beyond, didn't get up to 150. But this is a market that's been as low as 80, 90, and on average trades in that 100 to 120 range. A lot of trading over the course of the last 30 years in that range. Right now, trading right around 150, and for good reason, theoretically, as forex markets are influenced greatly by interest rates, very similar to a commodities supply and demand dynamics of, there's more supply, no, then the price might move lower. There's more demand, price might move higher. There's more of both, maybe the price is unchanged. Interest rates very similar relatively, U.S. rates to Japanese rates, that can really affect U.S. dollars to Japanese yen. And since 2022, the start of 2022, U.S. rates went from 0 to 25 basis points, essentially 0% interest rates, to now being 5.25% to 5.5%. So over 5%, they've climbed in the last around 2 years. In the same time, Japanese interest rates have not moved. Not only have they not moved, my friends, but they're still negative, which is, in terms of major economies, Eurozone, they've got 4% interest rates. UK, they've got around 5% interest rates. Australia, they have, I think, 3 to 4% interest rates. Canada, similar story. Japan, negative 10 basis points still. And so you get a lot of demand for a higher interest rate currency. If I'm long dollars and short yen, then I could be making money over that overnight interest rate being high for the currency that I'm long and not so high for the one that I'm short. And so you've seen, and here laid on top of that same dollar yen chart over the course of the last couple of years is the US 10-year interest rate. And I mean, I don't really have to say much. The graph tells you a lot. That both markets have, one, been moving higher, but two, they've been kind of peaking and troughing with each other. And has a lot of people wondering, well, first of all, rates right now, this is the 10-year. The 10-year rate is higher than it was at the end of 2022. So should that dollar versus yen be moving higher? Again, overnight rates are more direct an influence here. But could this dollar yen get higher? Could the yen fall even lower? Took a look at futures options prices for the yen from the CME group, and the strike correlating to what would be essentially the 155 call for the start of 2024. So essentially giving us, what are the chances that this market closes at or above 155 by the end of the year? And it's about an 8% chance, which doesn't seem like much, but I showed you that historical chart going back to the 90s. In the last 30 years, again, this is a market that's traded above 150 once. It hasn't gotten close to 155. And market's saying there's about an 8% chance that they close above that level. So realistically, traders thinking that this yen market could fall further. Again, on the flip side of that, this market could normalize in a big way. It's one that's traded down to 130 as recently as January, February of this year. So we'll see how bad this yen collapse can get. But right now, sitting at 30-year lows, crazy.